Summer is a time for movie blockbusters, so I thought I would start this week's trading video off with a classic clip from outlaw Josie Wales. Bounty hunter walks into a bar, says, "You Josie Wales?" "Yes." "You bounty hunter?" "Guy's gotta make a living somehow." And Josie responds, "Dying ain't much of a living." Now, it doesn't have to be this way. You can just walk right out of here. And so the guy does. Then a few seconds later, the guy walks right back in and he says, "I had to come back." And Josie says, "I know." And then Josie kills him. How in the heck does this relate back to trading? Summer is one of those times when you want to lay low and you want to keep your activity at a minimum, and price action is what tells us that we should not be trading a lot of size. But most traders can't resist the temptation. So they force trades and they lose money. They piss their hard-earned capital away. So I want to make sure that that's not happening to you right now. This is a time when you want to very selectively trade. How am I supposed to make money? How am I supposed to pay my bills? Well, losing money makes that a whole lot harder. So if we take a look at the market and what it's been telling us recently, we can see that two things are happening. Number one, the price action has gotten very choppy. We can see long mixed red candles and green candles. And you can also see that a range has been established. So roughly from 725 on SPY to about 765 is the range that we've been in. Now you'll also notice that there's a downward sloping trend line here. This is an auto-generated trend line. That is the upper end of a wedge formation. If you do the same and you connect the lows, we don't need to worry about this bar. We're going to draw right through it. You can see that there are a lot of touch points along this lower trend line. A wedge has formed. So not only have we been in a horizontal range, there's also a wedge within that horizontal range. So a compression within a compression. Those are very low probability trading conditions. If you go through your P&L every year, you're going to notice that there are a lot of peaks and valleys. And most traders take a look at their activity and they assume that because they've had a drawdown or difficult trading or their percentage winners have declined substantially, that this is execution related. Gee, my performance is bad. I'm just not picking stocks very well right now. That's not the problem. The problem is that you're in a low probability trading environment. The market is simply not giving you much to work with because there's no trend. Very important that we save our trades for conditions when buyers or sellers are acting with urgency. Well, how do we know when that happens? Well, that's when we see stacked green candles or stacked red consecutive candles. That is a sign of urgency. When you have mixed overlapping candles, it tells you that neither side is in control. Buy and sell programs are dominating the action. All these programs do is they're searching for size on the bid or the ask. That's it. Price action is random. Very, very difficult conditions to make money in. So you'll also notice that on the chart, we've got this longer term, what I call a H plus trend line that extends all the way up to about 780. Now, this is a target level that I had looked at about 2 or 3 months ago, and I said, I think it's possible for us to reach that sometime in July, maybe very early August, but then I would be cautious. So how did I come up with that 780 number? If you take a look at the high here and the low here, and you take that range and you add it back to this high, it also comes up with 780. Now, does that mean that the market's going to rally up to 780 and then just roll right over? Is this some kind of magic number? No, of course not. The market's been making all-time highs, so we're simply trying to gauge where we might see some resistance. Are we going to get back to 780? Well, 2 months ago, I thought that was very possible. Now, I'm not so sure. We've got earnings season coming up. This has been a fairly lengthy pullback. It's really kind of a compression. It's price consolidation. We moved down to the 50-day moving average. You would expect that we would fly off of it and make a new all-time high very quickly. Didn't happen. In fact, the market pulled back and tested the 50-day moving average again. And you can see that these candles are mixed and overlapping, and that the volume is very, very light. This is not a strong market pattern. So what's the best thing that we can do right now? Wait. We have to wait for resolution. How is that going to manifest? Are we going to see long green candles breaking out through the all-time high? Well, that's what we'd want to see. That would be a sign that buyers are acting aggressively. On the downside, what would we want to see? We'd want to see closes below the 50-day moving average, long red candles absolutely obliterating that 725 level. If we saw that, it would pave the way for us to test the 100-day moving average. We don't have a catalyst right now. The economic news has been stable. It's been pretty decent. Jobs report was a little soft last month, but ISM manufacturing, ISM services both came in strong. So ADP also a little soft, but not bad. So the employment backdrop, the economic backdrop is pretty decent. The Fed, they're not going to do a thing. The Fed is sidelined right now. So a non-issue. Well, what's the next catalyst? Earnings season. So we've got earnings season starting this next week. And JP Morgan Chase announces earnings on July 14th. And really that week after that is all dominated by banks. There aren't a lot of other companies and a lot of other sectors that we hear from. So as far as major earnings announcements and announcements that will give us an overall feel for how all the groups in the sectors are doing is probably 2 to 3 weeks away. In fact, the mega cap tech stocks, they don't announce until the last week of July. Shorts are not going to be very aggressive ahead of that. And we typically see a nice, strong market bid into earnings season. What does a nice, strong market bid mean? Does it mean that the market's gangbusters going to rally to a new all-time high? No, not necessarily. It means that we're not likely to see a big market drop. And that's something that I have been keying off of for the last couple of months. I like the way the price action was unfolding. I was selling out of the money bullish put spreads, doing extremely well. When I saw this price action and the second retest of the 50-day moving average, I went from neutral to slightly bullish to neutral to slightly bearish, because I think that we're reaching the end of a timeline when the market could have established that new relative high. Well, why would I all of a sudden start to think that the market could start to show some signs of weakness? Few things, and I've gone over this in my previous videos. One is that when you test a major moving average, you want to fly off of it. That tells you that buyers are anxious, buyers are aggressive. Well, you don't come back and you don't test it a second time. You also don't linger around it like we've been able to do. That demonstrates that sellers are actually showing that they have some control. And when you look at the bounces off of those tests, they've been very meager. So in essence, buyers and sellers are in balance. I'm not looking for a big market move either way, but it could happen after we get those earnings announcements. August and September typically are soft months. You've got the Fed goes into recess, everybody starts worrying. Oh my gosh, are they going to cut rates? I don't even think that's possible right now. In fact, there are a couple of Fed officials who are calling for a rate hike. I don't think that's going to happen either, but politicians leave Washington and the market is on autopilot. And investors get a little uneasy. They get a little nervous. There's some seasonal weakness. And then we've got the midterm elections coming up in November. How's all that going to play out? What type of uncertainty could we possibly see there? So I think that the market's going to go into a holding pattern after that earnings season starts to unfold and play out. One push up to the all-time high, sure, it's possible. Am I looking for a big rally from that point on? No, I think that we're probably going to see a little bit of weakness because we've already started to see some signs of selling pressure. And valuations are very high. Earnings season should be excellent. So we're seeing good earnings from companies. It's not a problem. The problem is the valuations, the PE ratios. So they're very, very stretched right now. And we've started to see some worries in the AI sector. So the chip stocks that were leading the charge higher, they've been stalling out. They really haven't been able to push higher and higher. So those are my concerns. And let's take a look at my last trade that I recommended. And this is on Wednesday. It was MicroStrategy. I actually gave you a short. Said, the way I see things playing out right now, I believe that the market is going to continue to test that 50-day moving average and we could crack below it. So let's see if we can find a decent day trading short. Emphasis, day trading. We're keeping everything very short term right now. So we don't want to have a lot of risk exposure because we've got earnings season coming up. We want to see how all that plays out. We want to tread cautiously while those earnings releases come out because the market could crack down. So let's see how it plays out. And MicroStrategy has been a weak stock. You could see Wednesday before the open is when I released my video. Stock gap down instantly on the open. I couldn't see that happening, but the stock has been weak on a D1 basis. What has the market done since that opening? Well, look, the gray line is the SPY. SPY has had a huge rally in the last 3 days. What has the stock done? Nothing. It has not been able to rally in a strong market. This is a great short. We didn't have the market selling off, so we didn't have any opportunities to short this stock. Could you have shorted this big gap up on Friday? Yeah, you could have shorted it, but with the market showing that it's breaking out above this trend line here and it's breaking out of the wedge, you really shouldn't trade on the short side. And I'd also mentioned here are the patterns that I'll be looking for that favor the short side. If we take a look at the D1 chart of MSTR, you can see how weak it is. This is some heavy sustained selling. This is just an oversold bounce. And you can see how the stock has been weak relative to the market, red line below zero. This is going to be a nice short, but it needs help from the market. So if the market just stayed flat, this stock would be likely to drift lower. So right now, my point is, don't lose money trading a low probability trading environment. And as you go through your trade logs, and you go through your P&Ls, and you take a look at those weak periods throughout the course of the year, if you can call out those weak periods, and if you can recognize them and keep your trading activity to a minimum, those losses are going to go away. And then you're going to be focusing on those very, very profitable periods, those times of the year when you have stacked green candles or stacked red candles, and when one side or the other is acting with urgency. If you save all your firepower for those moments, that's when you're going to make some hay. I don't see that coming up anytime soon, so I think the next 6 weeks or so are going to be a time to tread very cautiously. And if I add up all of those really good moments throughout the course of the year, there are a handful of times, and they last probably 3 weeks or so, but there are a handful of times through the course of the year when I make the majority of my money. And if you strike when the iron's hot and you make those really nice returns, those are going to tie you over when you have these very slow periods. And that's how everything evens out. Otherwise, if you're trading the same way all year round, you're going to have these huge peaks and valleys, and you're going to be giving money back when you shouldn't, and you're going to scratch your head and wonder, how the heck can anybody make money trading? Keep your powder dry. So that's today's lesson. The rest of the video is going to be relatively short. I'm going to give you a pick that I like that came up on my searches this week. It's actually a stock that I've highlighted previously as well. So I'm going to show that to you, and I'm going to show you a strategy that works. Yes, we're going to sell some out of the money puts on this stock because I really like the strength. And it just released earnings, so we don't have to sidestep that. Again, when we're selling option premium, we want to make sure that that expiration date is not spanning the next earnings announcement. And that's the difficulty of selling puts right now, is that you are sidestepping. It's like walking through a minefield where you've got earnings announcements after earnings announcements. It doesn't even have to be the company that you have a position in. It could be a company from the same group that influences the stock that you're in. So you've got to tread very cautiously during earnings season. Well, we've got a pick that just announced earnings, and they announced gangbuster earnings. And I'm going to show you the price action that I like. Now, this is a stock that I highlighted in one of my recent videos, and I'd mentioned to you, I love this pattern right here. You can see how the stock rallied from $18 to $70+ in a matter of months. Now, most traders are going to look at this and go, I'm not going to buy that. It's too expensive. It's run up so high, it's going to pull back. Exactly the opposite is true. This company has done something incredible, and long-term asset managers are accumulating shares. That's why the stock goes up from $18 to $60, $70 in a very short period of time, because they are investing 2 or 3 years out. They don't care what the market is doing right now. They are discounting future cash flows, and they see the prospects for this company 2 or 3 years out as not being priced into the current stock price. So they're accumulating. They want to own this long term. This could be the next superstar stock. I have tons of examples like this. LITE comes to mind, and that stock has just kept going higher and higher and higher. And all along the way, it looked like it might be overvalued. So let's zoom out and take a look at what this stock has done. Look at this run. This is what companies that have disruptive technologies and huge potential growth do. So these buyers in here, they weren't worried that it was overvalued. They're looking way the heck out here, years ahead of time. And they see this as a really good value proposition. And when that happens, you get this steady, steady, steady price action, just like this. These are the stocks you should be trading, not all that choppy crap. This is the pattern you want to look for. And this stock has it, and they just announced earnings. So if this move here was all fluff, all fabricated, just a bunch of retail traders coming in and buying the stock, they don't know what they're doing. If that was the case here, what do you think would have happened around this earnings announcement? Smacka, smacka, smacka. They would have driven this thing back down to $18. Is that what happened? No, it's not. The stock has been able to preserve all of these gains after that earnings announcement, and it's trying to break out of this horizontal compression. I don't really need to know what the company does. I know that they are in the AI business, so of course that's the hot sector right now, but their revenue growth is pretty incredible. So I've looked at the company. I don't want to say that I don't know anything about it. I do. I looked at it. I looked at what their revenue growth projections were. I read a little bit of the forward guidance. And then I just watch price action. I don't have to be an expert in the stock. I just have to know if long-term money is coming into it or leaving it. And right now, I like what I see. What are the odds of this stock falling below that $60 price? Minimal. It would have been giving these gains back already, and it didn't. What are the chances that it's going to be below the 50-day moving average? Negligible. All right, well, that gives me kind of an anchor point. That gives me a support level that I can lean on. Now I just need to see if this stock has some expensive options, because what I'm going to do is I'm going to distance myself from the action. I'm going to operate under the premise that earnings season is coming up. We're not going to see any huge market decline, probably for a month or so. We start to see some weakness, maybe in August, or just horizontal price movement. September, okay, maybe we get a little bit of a pullback. I'm not overly worried about that because I'm going to be selling options that are 5 weeks out, and I'm going to be looking to generate somewhere north of a 10% return in a month. And I'm going to be willing to take assignment if the stock is put to me. So let's take a look at what those options are trading at. And we're going to go out. We've got to go out to the August expiration. Now, I do have a position on. I'm long the stock. I also sold last week, right after I saw the earnings reaction. I sold these $65 puts for $2.55. They expire this next Friday. Awesome trade. All the way down to $60. I didn't see this horizontal support level as failing. Not even a remote threat. So now time is just chewing away at those options, and you can see they're currently 70 cents bid offered at $1, and they're going to vaporize this week. So yes, the stock tried to pull back. Yes, the stock rallied and it pulled back. And you could see that bearish hammer. And let's take a look at the 5-minute chart, because this will spook a lot of people also. So if we take a look at the 5-minute chart, you can see this big gap up. And this wasn't even the earnings reaction. This was the earnings reaction right in here. This was the follow through. So if you look at this, you think, oh my God, look, the stock pulled back hard. But it found support on Friday, so it's been able to hold these gains. It's going to take a while to work this supply off. There were some people who were profit taking. Okay, great. Well, in time, that supply of stock is going to be worked off and the stock will continue to inch its way higher. I expect it to. What I don't expect is for the bottom of this stock to fall out, because it would have already happened. And so the strategy is to sell those puts out of the money, and I can go out to the August expiration, so 5 weeks, and I'm going to go down to the $60 strike price. They are $4.20 bid, offered at $4.80. So if I have to put up $30 on this, and I could bring in $3, that's going to be a 10% return in the course of 5 weeks. So again, I'm holding half of the strike price in reserve, because if the stock goes below $60, I need to have enough money to be able to buy it on Reg T margin. So the exchange minimum margin requirement is actually much lower than that. I'm being very conservative in my calculation of the returns that I'm going to make on this trade, because I'm assuming that I'll need to have that capital available to me, that I'm going to get assigned. And if I buy the stock, I'm not going to be buying it at $60. I'll actually be buying it closer to $55, which is all the way down to the 50-day moving average. So what are my support levels? Where am I expecting buyers to come in on this stock? Checkbox, 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 checkbox. The more checkboxes we mark, the higher our odds of success. And this is all probability based. So my first line of support is this horizontal resistance level. You can see we had touch points here, we had a touch point there, touch point there. almost closed at that level, right around that $72 level. That's my first support level. That's also the halfway point of this long green candle, which was the post-earnings reaction. So that's my first support level. My next support level is that $60 lower end of the compression. I really expect that to hold. Why? Because buyers have expressed interest there in the past. They should still be there. There's a long-term buyer there. So it should hold. I'm not expecting this support level to fail. And after that, I still have the 50-day moving average. This is a nice trade. And we're not just going to make a 10% return on this. We could make close to a 15% return selling these naked puts. And this is a 5-week trade, and we don't have to worry much about a huge market drop in here. We don't have to worry about a huge drop in the stock during the course of the next 5 weeks. So as earnings season starts to play out here, we're going to get a feel for how the mega tech companies have responded to their earnings. And that's why the bid to the market tends to be relatively strong, is because you've got 7-8 stocks that comprise 25% of the S&P 500. These are the stocks that have been fueling all of the rallies. So shorts are relatively passive. They don't want to have their head handed to them, shorting ahead of those earnings announcements, which could be explosive to the upside. So they lay kind of low, and then once the mega cap tech companies have announced, that risk is reduced, and then shorts start to get a little bit more aggressive again. And that sets us up for kind of that early August, mid-August, we start to see some soft patches in the market, and then you get into seasonal weakness, that is September and the beginning of October, and then you get the midterms with some uncertainty coming in. So that's how I see everything playing out. But again, watching those earnings reactions, there are going to be some great put selling opportunities for us again as those earnings reactions come out. Now, what happens if the earnings reactions are horrible and we get into August and we start seeing this 50-day moving average tested with greater regularity? We start seeing some long red candles. Well, then we're going to have to adjust, and we're already prepared that yes, the market is starting to show that the upward momentum is waning, the volume is low. We need to tread relatively cautiously. So that's how everything sets up right now. Day trading, I think, is the best way to go over the course of the next 2 weeks or so while we're waiting for those earnings announcements. There are opportunities on both sides, long and short. For those of you who are swing traders, I like PENG. I think this is going to set up to be a fantastic put sale, and I really like the strength in that stock. If you want to learn more about the system, please take the free trial, read my course that took me over 3 years to write. You're going to understand the basis for all of my trades, and the videos that you watch are going to make a lot more sense as well. And then you'll be able to come in, you'll be able to use Option Stalker Pro, all of our awesome searches, and you'll be able to watch us trade live in the chat room. If you find my comments helpful, please like, share, subscribe. You're helping me reach more traders. Ultimately, I'm just trying to teach all of you how to trade and how to do this for a living for those of you who aspire to be professional traders. Thanks so much for watching. Dying ain't much of a living. Keep your trades to a minimum while the market is trying to figure out its next direction. We will see you Wednesday, and I'll have another great pick for you then. Thank you. Trade well. See how we trade live every day and take our 14-day free trial. I won't even ask you for a credit card. Dive into the action and trade alongside of us. Your downside is that you get some great trade ideas. Your upside is unlimited because you'll learn the skills that you need to be profitable. Check out OneOption.com and see for yourself.